Stock investors, are we going to see all new lows during this stock market crash? Let's jump into the video. Welcome back to the channel. I'm Mike the Investor, helping you invest in yourself by sharing my investing journey and inspiration. If this is your first time checking out the channel, be sure to smash that like button for me. It really helps out the channel and it lets me know you all appreciate the content that I'm putting out. And be sure to click that subscribe button as well, so that way you don't miss any more new videos that I release every single week. So we're going to be looking at a few different graphs showing you the downturns in the market since the last stock market crash in 07 and 08, and then I want to show you all of the downturns in the market since the last recovery of the Great Depression. So let's go ahead and take a look at this graph right now. So looking at this graph here, the deeper the stock market decline, the longer the recovery. This shows the declines in the S&P 500 since December 31st, 1945. Now this was the recovery after the Great Depression in 1929. Now you can see how long it took the economy to recover if the Great Depression started in 1929. Now on the far left it has all the decline percentages: 5 to 10%, 10 to 20%, 20 to 40%, and 40+% of decline. Now you can see we've had 79 5 to 10% declines, and the average is about a 7% decline, which takes about 1 month to happen and 1 month to recover. As we look at the 10 to 20%, we have 29 declines since 1945. The average is 14%. It takes about 4 months for that to happen and 4 months to recover. The 20 to 40%, it has been 8 declines and the average is 27%, and it takes about 12 months or 1 year for it to fully happen, and it takes about 15 months for the average time for it to recover. And then when we look at a 40+ decline, we have had a total of 3 of those so far in our history, and the average decline percentage is 51%. That cuts the stock market in half, so that is extremely low. The average length of decline in months, it says 23 months, and the average time to recover is about 58 months, or a little bit over 4 years. So that is crazy how long it takes to recover when you see that big of a decline here in the stock market. So now I want to show you all a quick graph on going all the way back to October 2007 all the way up into now to kind of show you all of the big downturns in our market. So let's go ahead and take a look at this graph. So looking at the S&P 500 index current market snapshot, now this goes all the way back to October 9th 2007 all the way to the current day of March 16th. Now you can see since October 2007, the stock market has been on a tear. We've had a few dips and a few pullbacks, but mostly the stock market has been growing and rising. And now as we look at 2020 here, you can see how things have really started to turn around and started to do a reverse. Now I want to show you the same graph, but showing you all of our downturns on this graph since October 9th, 2007. Now you can see October 2008, the biggest decline was 56.78%. That is a huge drop here in the market. And as we go all the way to the current day, our biggest drop so far is 29.53%. So that is almost a 30% decline here in the stock market in just a matter of almost a month that we've really started seeing this extreme volatility. So this is how quickly that things can turn around here in the market. So it is very important for us to not catch a falling knife. You want to be cautious, definitely investing in these markets in these extremely volatile times. We don't know how far this downturn is going to go. We don't know if we're going to see a new all-time low as well. And if we see an all-time low, the market is going to go extremely down, which will give us, you know, the best buying price that we've ever seen in history. But at the same time, how much damage will be done in the process? Those are some things that as investors we want to take a look at, so we're not catching, you know, a falling knife. So now I want to show you the graph of how all of our sectors is performing since the beginning of the year to the current day of March 16th. 16th. So let's take a look at this graph. As of March 16th, the lowest sector that is getting hit is hotels at 58.8%. We look at the energy sector at 49.3%, airlines 46.7%, leisure and entertainment at an even 46%. We see retail 37.4%. The red line will be for the SPX, which is the ETF that tracks the S&P 500 at 28.5%. And then the top three sectors that is holding up will be technology at 28.3%, healthcare 23.2%, and then we have our consumer staples at 18.4%. So let me know down in the comment section what sector you thought was performing the best, and it's kind of good to know what sector is performing the best during these current conditions so we can kind of utilize our portfolio to the best of our ability. So this is historical times right now to see the current conditions in the markets. The Feds just cut the rates down to 0, so it's very interesting to see what's going to happen here in the short term and the long term. We have countries that are getting locked down. We have the oil industry that is getting plummeted. We have the extreme debt here in the US, over $25 trillion now. The credit debt, the house mortgage debt, the auto loan industry debt that is actually more, than our mortgage debt as well. So it's so much, that is going on. The national emergency. So I'm very curious to see, what all of you think with everything that is going on, not just as investors, but just everything as a global economy. So a lot for investors and a lot for the American people. Hopefully you all gained some value from this video. If you did, remember to smash that like button for me. It really helps out the channel and it lets me know you all appreciate the content that I'm putting out. And be sure to click that subscribe button as well, so that way you don't miss any more videos. I'm Mike the Investor. Remember to stay inspired, stay motivated, invest in yourself, and I will see you guys back next time.